What's going on YouTube? Welcome to today's video. We're going to break down Euro USD. I'm going to show you how to make sense of a noisy market, starting from the higher time frame and being able to read what's going on and then coordinate lower time frame setup. So let's jump into the charts and dive in. Okay, so what we have in front of us now is Euro USD. This is a daily time frame. And a common question I get pretty frequently is when you're looking at higher time frames, if we take this, and I can also pull up another example of Euro Great Britain that I was talking about the other day, when we have something like this and you have a lot of price action that looks like it might be coming down and then it looks like it's pushing up. I'll flip to a line chart and we can see that a little bit clearer. You can see a bunch of lower highs, a bunch of lower lows. It looks like it's breaking up to the upside, creating bullish structure here, and then it breaks structure and now it's showing bearish. And you're gonna have all of these different time frames showing different things. So we might see daily showing bullish and bearish. We might be going to a lower time frame and it might be showing bearish. You go to a 1 hour, it might be showing now bullish on a 1 hour 15, and it just doesn't make much sense. There's no rhyme or reason to it. So what I am looking for when I pull up a chart like this Euro USD, let me go back and I'm gonna go back to a daily time frame. I want it to be easy to read. I'm not necessarily looking for cookie cutter, but if I can't make sense of what's happening, I just leave it alone. And that's the big benefit of having a watch list. So you might have a number of pairs that are making higher time frame pullbacks while the other half of your watch list is already in a pullback and now it's gonna start to expand. So I like to look for stuff just like this. When we pull up Euro USD, there's no question that this is bearish. Now, there's a couple things that we can do to really make sense of this price action and put us in a position where we can find really good high quality trade setups that are in alignment with this higher time frame. Because anything buying here, we know based on this price action here, it's going to be a correction. It's going to be a higher time frame pullback. So if we can align ourselves in the key areas for short opportunities, it can provide a directional bias and huge risk to reward, a number of different opportunities, a number of different ways that you can attack it that can really help grow an account. So one of the big key things that I look for when I'm looking on all time frames is this here. First, expansions, and then second, contractions. Now that's the heartbeat of the market. Market is always going to move in expansions and contractions. Expansions, that is going to be fast moving price action. That's usually what's creating the lower lows or the higher highs. When we see the market contracting, that is consolidation. That is the market rebalancing or pulling back. So when we can establish that, that can help us really determine when we should start looking for opportunities and when we should just sit on our hands. Because a lot of people, if we just look at this price action, if I zoom into this right here, this right here is a contraction. We can see price moved aggressively down. That's the expansion. And then it just started doing this. And this is just a big flag. But this flag here, if I throw on the weekend indicator, these yellow lines divide up the weeks. So everything in between is a full week of price action, Monday to Friday. So we can see here, once this low is established, 1, 2, 3, 4, 5, and now we're currently in week 6. So that's over a month of price action in this big correction here. And a lot of people are probably getting tangled up and looking for opportunities inside this and getting run over, because a lot of the price action inside of these contractions, when the price is rebalancing on a higher time frame, is not going to have much rhyme or reason to it. So we need to look for very specific things in the market that can let us know that this is a key indication of price is ready to go and produce a move like this, or even this. So we would be looking for something like that. So let's go back and zoom out just a bit. And we can just start it right up here. So I'm going to quickly show you the difference between these expansions and contractions. So here we can see a nice flag pattern here, followed by this impulsive move down. Same thing here. Consolidation, this was just a big contraction right here before it made another move to the downside, came back up, retested, nice little signature pattern here. And then it made another impulsive move down, followed by a contraction here, impulsive move down, another flag here, impulsive move down, flag right here, impulse move down, and now another contraction here. So we can see this is going to help you make sense of what's going on. And all of these contractions and expansions, they're giving us our lower lows and our lower highs. So we can see this is our lower high, and potential lower high right here. And we can see the lower lows are at the bottom of those expansions. So based on what we're seeing here, and we can see very clearly contractions and expansions. And the way you can really do that is these expansions are going to typically be more aggressive price action. It's going to be faster. You're not going to see a lot of candles like you would inside of here or here, here. So even look at this. This is 5-6 weeks of price action, tons of daily candles, but the impulsive move was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. And a couple of those were just little doji candles. So on a weekly, that would even clean it up even more. So take a look here on the weekly. And I'll take all of that off. So you can see here, weekly multiple candles, all the expansions are just down candles, black candles, pull back, down, down, down. So we can look at this, and based on these expansions and contractions, what would we anticipate right here? Would this indicate a reversal, or would this indicate something like this? So now when we get to this point and we can clearly see the market structure on these higher time frames, and we can clearly see, okay, price is in an expansion or it's in a contraction. Now we need to determine what to do. Are we waiting, or are we looking for setups, and when and how do we do that? So one key distinction that I want to point out with all of these moves, look at what happened before all of these impulsive moves down. Take a look and see if you can find something on these charts. I'm going to scroll up to the top one here, and we're going to start with each one. So we can see right here, we had relative equal highs, but this was also a break retest level. Support, price breaks through, enticing sellers off of this resistance. And before the move, we can see price pushed up, capture these highs here before pushing down. That was manipulation. When we come down to the next expansion here, or the bottom of this expansion here, before it starts consolidating, and this is just resting period. All of these contractions are building up liquidity, and that's why we're seeing this. We're seeing price move sideways. It's forming a lot of opinions. So you can see here, that would be probably considered some type of resistance level, enticing or inducing sellers into the market too soon. So it's a lot of opinions are going to be building up on this. Maybe people are buying here. Maybe people are looking for breakouts on the top, or some type of break retest like this or like this. And it's just bringing people into the market too soon. And we want to wait for the key indication, which is the footprint in the market, which lets us know price is ready to go. And that happens here. So if I were to even remove this, that's going to entice people to come in now, because it's breaking this resistance, and they're going to now look for buying, and stop losses would go under obvious lows. And that's what we want to look for. We want to wait for price to start building up liquidity and moving sideways after we see these big moves. And then we want to see manipulation. And this is what we're seeing before every big move. It runs on the highs, and then we can see the move happens afterwards. So price pushes up, runs on these highs, and then sure enough, it aggressively pushes to the bottom. This one here, nice signature pattern, came back up, retested this area here before pushing down and creating a new expansion, creating a new lower low. Let's keep going with these examples. So same thing that we saw up here. We can see another break retest level here. Price touches this level once, twice, builds liquidity, and sure enough, before the move, price pushes up, inducing buyers, and then falls off, creating another manipulation candle. So you can see before every single big move that happens on the higher time frame, we can see price moving sideways, building liquidity, lots of opinions forming, and then running on the high, or in a bearish environment, running on the low before going to the opposite side, creating a lower low or higher high. So we can see the same thing here. Another break retest level. We have some highs here. Price pushed above those highs and then fell off and came all the way down. And that leads us into this price action that we're seeing here. So this price action, like I've been talking about in the beginning of this video, this has been moving sideways here for going on 6 weeks. So this has been a long time of just moving sideways, building liquidity. And we can see here, resistance level. And what just happened recently? We saw price push up aggressively on this level here. And then we can see price immediately reversed. Daily bearish engulfing candle, followed by another daily bearish candle here. So based on all of this information that we've seen, where price makes a big sideways movement, consolidation after a impulsive move, and then runs on the high, we can see that that is the indication of price doing this and coming down and making another move down to the downside, creating a lower low here. So when we see this stuff, now we can start zooming in and look on a lower time frame. Typically from a daily, you'll be able to see these patterns on a 4 hour or 1 hour. And then even from there, you can repeat the same process and go down lower. So if we zoom in here, I will go down to a 4 hour. Couple things that we would want to look for, maybe a strong impulsive move, which we can see that here after running the highs. And we also want to see typically a break of structure. So we can also recognize this here. We have a support level here. And this is also going to be a trap. This is going to bring buyers into the market here. So we know that there's going to be more liquidity building here. And this would be the primary target, this lower low. And this would be with the intent that price is going to come for this low and eventually make a lower low. So all we'd want to do now is start looking for the same patterns, but more on a micro view, because we saw it higher time frame, and now we want to look for the same patterns, just drop down. So ultimately, we would want to see something form here, and this can be in the shape of something like this, where price has made a strong push down, and we can look for something that might start building liquidity like this, and then push up here, slam down, and give you a nice signature pattern that you can then attack like this, get a nice entry, stop loss, and we know where we would be targeting, this low here. So this is really just understanding the higher time frames and then building a setup that is in alignment with that, because we know buying here, that's risky for many reasons. One, it's against the higher time frame direction. And two, we can see that there's a lot of liquidity building in these contractions. It's enticing people buying and selling off this support level, for example. People are probably looking for buying opportunities. So we don't want to be in alignment with that. We don't want to be buying and putting our stop loss with where everybody else is doing it and following that herd mentality. Now I'm going to quickly show you an example of one of the trades that we have taken in this bearish movement. There's quite a few that we can show. This was a good signature pattern up here, and the same pattern here that I'm going to talk about was down here as well. And again, all we're looking for is once price gives us that clue that it's going to break out. Let me zoom in. This was a really nice pattern. This was used on a previous example in a previous YouTube video. We can see a nice little retail pattern. Price pushed up here, inducing buyers only to come and attack the lows, making this lower low. And we can see price making a higher time frame pullback. And then once it gets up into this area, we would look for price to break down. And this is just where we zoom in and we just look for the same patterns. And I can show you a few examples really quickly. So 4 hour, this was a really nice one here. I remember it like it was yesterday. This was an awesome trade. So we can see price pulled back, started coming down, broke structure, and exactly what I said we would want to look for on that other example. Price push down, break structure, start building liquidity, push up, entice buyers, and then slam down, making a new signature pattern, and we look for a retest. So we can see that here. Price moved sideways, it pushed up, slammed down, impulsive move. Price came back up, tested this manipulation candle here, and then eventually came down, and we would know where price would be coming, the low right here, targeting the low, and eventually make a lower low. So once we know price has run on the highs out of the contraction and has started breaking down, that's all we look for, is the same pattern just zoomed in. So if I were to just press play here and use this example, so we can see price is starting to do it here. It's just moving sideways. We can even zoom in a little bit. You can see it's doing the exact same thing we showed on a higher time frame. Impulsive move, contraction, impulsive move, contraction. In these contractions, we would just look for a signature pattern. So let's play this. We can see consolidation, consolidation. I'll speed it up a little bit. And there it is. So if I drop down one more time frame so we can see that wick clearly, we can see this is exactly what we would want to look for in that higher time frame contraction. We can see price moving sideways, it slams up and then slams down, offering another entry here. Let's play it. Price gives a nice pullback. There's the entry. Continuation, we would look for it to take this low here and eventually make a lower low. Consolidating, and there it goes. So that's all we would basically be doing based on what we're seeing on those higher time frames. Anytime you get the indication on these higher time frames like this, here, or here, 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 and now with this current price action here, all we're doing is diving into these expansions and looking for the same patterns on a smaller view. So again, on this move here, we would just be dropping down 4 hour, 1 hour time frame and just look for those patterns that we just saw in that previous impulsive move on a lower time frame, which was only a 1 hour, 4 hour, 30-minute time frame. So simply just look for something like this. Boom, boom, and then we can get our entry here, and now we're in alignment with the higher time frame, and we would look for price to come down, attack the low, and make a lower low. So that's gonna wrap up this video. Hopefully this gives you clarity on putting together the pieces on these higher time frames and coordinating lower time frame intraday setups with the higher time frame alignment. I'll see you in the next one.